Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Jim, thanks for having me back today.
Ted, you said there's kind of two different attitudes about what's going on in the markets. One saying, well, perhaps we've seen the bottom in stocks, and science and stimulus programs will allow stocks to recover over the next 12 months. Is that what we're seeing right now?
Well, certainly in the last few days, it looks like that's the narrative that's winning the day. We'll see how long that lasts, but we're getting into sort of at least a optimism, a part of the rebound here. Then the question is there enough substance behind this optimism for it to keep going, or do we get into that other narrative where you've got a lot of commentators saying, yes, we're going to get a narrative, we're going to get a rebound, but really it's based off false hope. We've had so much economic damage, it's going to take years to repair, and you're going to get a downturn. So those are the two types of narratives, to generalize, of course, that's always a dangerous thing to do. But in general, I mean, I think that's sort of, you've got those two competing forces at the, at the 50,000 foot level, and, everybody's got their different takes here and there. But so far, we've got a sort of a relentless last few days of recovery here, it seems, but we'll see how relentless it is after Easter, whether we have a different mood or not. We'll have to see.
Apparently, one of the most Googled things right now is how to buy stocks, because a lot of people think things have gone as low as they're going to go, and it's a great chance to buy those high-priced stocks you couldn't afford a month ago.
Well, certainly on March 23rd, it was a lot of bargains in the market. I don't know whether now we have as many bargains. Certainly our insider indicators are suggesting that really we're still in this bottoming process. So, I think there's a 50-50 chance, Jim, based off of what we're looking at on our indicators, that March 23rd low was a significant support level for stocks, but it's not a slam dunk. So what does that mean? I think if, what we would take from it is that, look, there's a pretty good chance that first narrative is going to unfold, that you've got a combination of science and stimulus, right, working for you. You've got, the best, brightest minds in the healthcare industry trying to find a vaccine and ways to deal with this. Personally, I think that the most immediate solution is going to be via a testing strategy. But regardless, there is science at work. We know there's also stimulus. There's a lot of stimulus. So that combination, could support stocks from March 23rd. So we'll have to see, but there's a chance that it's not enough, that the science takes longer than expected, and you get a chance to buy stocks even lower.
Are people trying to hunt around for pharmaceutical companies that could come up with a cure or a vaccine? Or is it a case of there's just so many of them, you're probably likely to pick the wrong one?
Well, certainly, we're looking for healthcare stocks, COVID-19 stocks, that rank on our screens, by a combination of insider activity and good valuations and good price momentum. So we have seen a few, and I talk about them once in a while in our new Inc. chat feature that we've launched for our subscribers on Inc. and CanadianInsider.com. And so some of them are fairly small, so I don't want to get into them here. But yeah, there are a couple of Canadian companies that we've come across that are active in this space. But of course you have to take a diversified approach. It's a big race. Not everyone's going to win the gold medal, obviously, and there are going to be a lot who don't even, get to the podium. So there is that risk, but there are opportunities there, and we certainly like the testing space, and that's one we're keeping an eye on. And of course, then you've got the therapeutics as well, and the care industry, and there's a lot of interesting little solutions that are popping up. So there are opportunities there, and you just have to be careful you don't overpay and don't get carried away with sort of some, you don't want this turning into sort of another marijuana type experience where people are piling in right at the highs. So you have to be picky, and that's why we use our screens, and we stick to our disciplines, and we'll look at stocks that make our screens, and wait for other ones to see if they can make it if they're not there already.
Do people have to be really aware of scam investments? All
the time, not just now, but and the fact of the matter is, there, as you mentioned just earlier, there have been so many good companies that have been beaten down on their valuations. You don't have to chase a miracle cure for COVID-19, to potentially make some money here. So there's a lot of good companies that have really been hit hard, and we've written about a couple of them, and there's some interesting dynamics going on in the oil and gas area as well. That's of all the sectors, that's the one we're probably getting the clearest signal that we're probably at some key support levels here. Now, within this sector, within the oil and gas sector, you've got a range of different situations. So, if you're a natural, 100% Alberta-focused natural gas producer, your situation is a lot different than if you're a company that's got, most of its assets dedicated to heavy oil, tar sands, right? So, you can't blanket the opportunities in the oil patch right now, and it does take some homework. So it's not a case of just sort of taking out a shotgun and hoping for the best. But, if you look at individual situations, and if this process does take longer than a V-shaped recovery, and I think there's a good chance it will take longer than a V-shaped recovery, you shouldn't be in a huge rush to pick your stocks. You can do your homework, because, I think there is a very good chance that we do at least test, those March 23rd lows, or consolidate above them. There's a lot of people talking about the retest, so that almost guarantees it either doesn't happen or that it crashes right through and there's no sort of slow motion descent. So we'll just have to see. But if you stick with the fundamentals, you have some objectives, and you take your time to look for those companies that you're happy with. And don't forget, if the prices are rising, Jim, because the risks are receding, that's okay, right? What you don't want to do is chase stocks that are just going up on momentum and central bank stimulus when the risks haven't receded. So, if the stocks are still flying here, and the situation in the U.S. isn't improving, and Quebec and Ontario continue to have a hard time getting on top of their cases, then that would be a warning sign. But if stocks are rising because there's treatments, testing strategies, and people are coming out of lockdown, then that's a different story. So the environment is really important, and what's going on the science side of it is extremely important here.
We'll have a special offer for HowStreet.com listeners from Inc. Folks, yourself, but we'll tell you about it at the end of the show. So stay tuned. We'll have more with Ted Dixon right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU.
For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Ted Dixon. Ted, are Canadian midcaps a way to benefit right now from this turnaround of the economy?
We believe they are. Now, we have 4 key investment themes that you can look at in our market report. And the core theme, or the number one theme that we look at, is Canadian midcaps as a way to benefit from what we call the G economy. Now, what is a G economy? It's a government-led return to nominal growth, okay? So, unfortunately, it's not the Goldilocks growth economy that, we've had from time to time in the past. But no, it's a government-led pro-inflationary economy where you've got all this stimulus that's coming in. And you know what? All that stimulus is coming in, but supply chains are going to be slow to get back to work. I'd be surprised if you get the same type of labor force participation in the United States that you had before this crisis. Just a lot of seniors probably are not going to want to go back to the workforce. We'll have to see. But that helped to keep inflation down. So if there is a scenario where inflation could surprise on the upside, and under that situation, Canadian midcaps do fantastic based on our studies. Now, we have the Canadian Insider Index, and it's got a 0.7 correlation with changing changing 10-year inflation expectations. So what's happened over the last month or so is, of course, the index came screaming off as inflation expectations collapsed around the COVID-19 scare. But inflation expectations rebounded in a V shape, basically at the end of March, and the Canadian Insider Index has recovered right along with it. The multi-million-dollar question is this sustainable? Are these inflation expectations sustainable? And again, that comes back to, which narrative is going to persist. And if we manage to get through the next few months with the science and the stimulus carrying us higher, well then Canadian midcaps, you want to have some exposure there. It's a great way to play it. And there's a good chance that we will have the G economy. It's not a guaranteed chance. There's also a chance we get what we call the D economy. That's the deflation economy. That's the other narrative where the economic damage is so hard, so strong, and it takes too long for the science to get on top of this, and we roll over and we go back down lower. And under that situation, you're exposed to deflation risk, and that's where Canadian midcaps would not perform well. So, but each situation could unfold. It's up to individual investors to kind of assess their own probability on what's more likely. But there are risks on both sides. If you're sitting in cash and you're sitting in even if sitting in things like tech stocks that worked in the past, and you have an inflation, those aren't going to work. But if you load up into Canadian midcaps and you have a rollover into the D economy, well, then you're going to lose your capital. So it's a tricky environment. But the way the one way of looking at it is hedging your bets, of course, and having some dry powder to take advantage of surprises on the downside, and having tight stops, of course, and keeping an eye on what the trends are. Is the science moving forward? Are we making progress? And are markets getting ahead of themselves, or are they kind of moving in step with the reduced risks out there? So it's a tricky time, but it's a time of opportunity. You do have to kind of reposition and recalibrate to these new times, but with all these stocks beaten up and the environment changing, it's shaking out a lot of old investment ideas, a lot of old investment positions. You've got a lot of forced sellers in the market, and that opens up opportunity. Now, the volatility has come down a bit, so that the opportunities are probably not as strong as they were a couple of weeks ago. But again, we could get back there again. And people, if we get this rollover back to sort of this de-economy, deflation worries, and one has to be prepared for both potential outcomes.
We'll have more with Ted Dixon right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, should companies that bought back their shares and failed to save for a rainy day be bailed out?
Absolutely not. That's it's going to have to be one of the must-dos by policy, must-dos by the policymakers is to eliminate the moral hazard that's associated with, you can do bad behavior, you can take all these risks when times are good, and the taxpayer will be there to bail you out. That's a big, big problem, and the issue is bigger, though, in the United States than it is in Canada, I believe. I don't think, I haven't seen the data, so I stand to be corrected. But really, where buybacks really took hold was in the United States, and part of it was tax code driven, I believe. That's why maybe it was not quite as prevalent here. So, that has to be part of the discussion. But I think that's more of an American challenge than Canadian at this point.
With 70% or more of Canadian jobs being provided by small business, does the government have to make sure that small business is still viable once this is all over?
Well, the reality of the matter is, the fact is, if they don't do something, that's going to put huge, huge strains on our social safety net. So, I think the government's moving in the right direction. I haven't seen the details of the plans. I suspect it's 80% window dressing and 20% effective. Their moves on the wage subsidy are a bit more encouraging. Again, I haven't seen all the details. I'm a little skeptical that they're going to be able to provide help to small business effectively. I think I saw something in the UK that only 1% of businesses, have taken up the UK offer. And if in the federal government, if it's relying on the Business Development Corporation to help small business, well, you can just, that's just total window dressing. There's the Business Development Corporation it's not going to be able to provide help to, gyms and restaurants, and they're just not interested, and they're interested in helping businesses that meet their criteria so that they can earn a return on investment, and pay their salaries and keep their organization afloat. They're not a charity, and so they're a crown corporation and with a specific culture that's really not well suited for these kinds of emergency situations. So we'll see. I'm skeptical, though, that the federal government is going to be able to meaningfully help small businesses, but I am encouraged on the wage side, and that will help small businesses if it's done right. So I'm encouraged on that. So I think they have responded well on the wage side, and I suspect that sort of these loans and what they're talking about, it will be more window dressing than anything. And do small businesses really need more loans anyways? I think the wage subsidy is probably the most innovative, and I would commend the work that the federal government's done on that so far. It's not going to be perfect, but they're trying, and I'll give them the benefit of the doubt, and I believe they're working in good faith on that. And it makes sense, it's just so disruptive. if people lose their jobs, then when we bounce back within a few months, and then you go back to your employer, and then they've geared down, and it's just it would really make things a lot more efficient to get back up and going if you can keep your workforce. So let's hope that the wage subsidy program does what it's intended to do. And I commend Bill Morneau and everyone working on that. Public health side, that's another issue. We talked about that in our last broadcast. I was fairly critical about their response on that. So I'll balance it out with something positive to say here on the wage subsidy side. And, you have to give credit where credit's due. And at least, I think they're trying very hard on that.
Should we be preparing for a monetary reset, say with exposure to hard assets and cryptocurrencies, gold and Bitcoin?
Well, this gets to we're not certain exactly how the two narratives are going to play out. So if we do get this B narrative, this deflation, the second narrative, the deflation economy, the D economy, then, we're in for hard times, and hard times probably call for hard assets. And I would include cryptocurrencies in that, and I would certainly include gold in that and cash in that. So gold miners, it's a different situation. I think you really have to look at the environment and the timing on that. And but let's start with the basics, the actual commodities. And we've got some interesting developments happening in Bitcoin right now, and we're going to be talking more and more about this on Canadian Insider and Inc. Research. Cryptocurrencies. We've just had a halving of the algorithm the algorithm in Bitcoin Cash, which is forked out of the Bitcoin Core a couple of years ago. And basically what that means is now it's twice as hard for Bitcoin miners, to create a Bitcoin Cash coin. So that the difficulty level doubled just today, I believe. So Bitcoin Core, which is the one that's trading somewhere around $7,000 US right now, the one that's widely quoted in the media, that will the process will have the difficulty level, I guess is the best way to describe it, will it'll become twice as difficult to develop these, to mine these Bitcoin to the Bitcoin Core in about a month. So I believe it's sometime in May that, then there's some sites that try and guess when that's going to happen. So what that means is the inflation rate goes down for Bitcoin, and Bitcoin Cash has dropped already. That should, everything else being equal, put upward pressure on the value of those. Okay, now there's lots of other things that go on in Bitcoin, including sentiment. Big sellers come in, they can knock it around. Bitcoin's very volatile, but the thesis behind it is it's a store of value. Okay, now you can debate that, whether it is or not. That's the thinking behind that. It should provide a store of value in Bitcoin Cash. There's also to provide, a transactional capability as well. So where does that fit into the hard asset solution? Well, we've seen that there are some issues with gold in this pandemic. We've seen some supply chain issues with refineries. We also know with cash there's some problems, potentially with the virus being in cash. So the point being is there's no perfect solution. And if we had another type of problem where there was a war or something, you would have a hard time reaching your Bitcoin if you couldn't have electric power. So you there's a case for diversifying these hard assets, these hard asset holdings into different ones. So I would keep your eye on certainly Bitcoin over the next few weeks and months. I think the halving process and whether we risk going back to this D economy if we take a turn back down, if the science can't keep making progress and we're worried about another wave of infections in the fall, then the second narrative could start to take hold and sentiment could turn south, and you'd be looking for these hard asset solutions to protect some of your wealth. But we'll just have to see how that plays out. It's a possibility, and certainly gold, Bitcoin, cash are are assets one wants to consider for that possibility.
Ted, tell us about the special offer for our listeners.
Well, we've had a couple of exciting developments at Inc. Research and CanadianInsider.com. Over the past few weeks, we've launched a new Inc. Research chat where I'm in there talking about our reports and comment for our paying subscribers and club members questions they could have. So we've got a special offer for your listeners if they'd like to join the Canadian Insider Club. Now, this offer is only good for Canadian Insider. We offer the Canadian Insider Club memberships there, so you get our core reports. And if you sign up as a club member via CanadianInsider.com, either for a club membership or a Club Ultra membership, which gives you access to Real Vision videos, use the coupon code JIM, all capitals, J-I-M, as in Jim Goddard, but just J-I-M. You'll get 50% off your club membership, and that's a recurring 50% off. So if you renew, and it's an automatic renewal unless you cancel, and it's easy to cancel, you get the 50% off as long as you keep renewing. So it's a pretty good deal. We'll leave that coupon live for 2 weeks, up until the next scheduled probably to talk another 2 weeks, Jim. So between now and then, go to CanadianInsider.com, sign up as a Canadian Insider Club or Club Ultra member, use code JIM, J-I-M, at checkout, redeem it, and off you go. And we'll invite you to our new chat function, new chat application, and you'll get our core reports, and I'm sure your listeners would enjoy the experience. So there you go, and take advantage of coupon JIM to join, J-I-M, to join the Canadian Insider Club at a 50% reduction.
That's the right kind of gym membership.
It is indeed. And plus, you don't have to worry about social distancing in the Canadian Insider chat room because it's all cyber. So there we go.
Ted, thank you so much for being on the show.
Thanks for having me.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.